All right. So I would like to invite Mark, who is from Fwd Technology and Innovation Malaysia, to start off by giving us a very brief introduction of Fwd Startup Studio.
Thanks, Rian. Hi, everyone. Good afternoon. The Fwd Startup Studio is an initiative that Fwd has launched to develop the startup ecosystem in Malaysia, with a particular focus on Islamic fintech, as well as in the Insurtech and Takaful-tech space. Under the Startup Studio, we have programs such as our pre-accelerator that we run in conjunction with 1337 Ventures. The third cohort for the pre-accelerator is open for applications. So if you have exciting ideas that you want to test out, do make the application to, you can connect with Wayan or myself. We also have a VC fund that we're launching soon, which also aims to invest in similar startups in the Insurtech, Islamic fintech space. We're quite excited to bring speakers such as Eddy and Malik over here to share their thoughts and their experiences in disrupting the Insurtech space. So Wayan, Malik Ali, and Eddy, over to you.
Great. Thanks so much, Mark, for the introduction. So without further ado, I would like to introduce our very first speaker for the day, Eddy Wong. So Eddy is an astute corporate executive, tech and biz entrepreneur, and also angel investor. He brings with him strong entrepreneurialism as founding CEO and MD of Malaysian-based Insurtech Visha Life, the first on-demand lifestyle digital insurance under the Bank Negara FinTech Sandbox. He's also on the advisory board of several consumer tech startups, EIR for global professional accounting accreditation bodies, and also venture partner and mentor at Nexia. He has over 25 years of immense corporate executive leadership, operational and commercial management, stakeholder engagement skill sets with past capacity as regional corporate executive, directorship, country and general manager, with executive leadership, commercial and P&L management responsibilities at Prudential Corporation Asia, Willie Parsons, and Experian. So, Eddy, you may begin.
Thanks, Rian. Thanks. Such a huge introduction. I mean, sometimes, when I heard about that, it made me feel so old. Well, again, thanks to Fwd Startup Studio and 1337 Ventures. Thanks for having me to share a bit of a perspective of what we have done in VSure.live, and also allowing me to share some of the experiences that we have gone through for the last 4 years and how we have gone through that. Maybe perhaps it might resonate with most of you guys here who's going on to a Insurtech startup or fintech startup in your journey, right? So without much further ado, they say a picture paints 1,000 words. I think a video will actually give 10 times more. So instead of me trying to articulate 2 words or PowerPoint slides, I have a video, an introductory video about who we are, what we do, what we stand for, to share with you guys, and I hope it resonates. Shihao, thank you.
They say still waters never produce good swimmers. Treadmills can't train great marathoners. Travelogues don't inspire amazing explorers. And YouTube seldom created master chefs. To win in life, you need to first experience it. Unpause life. All the things you love that shaped you into who you are today are waiting to take you into more liberating tomorrow. Introducing VSure.live, Malaysia's first on-demand lifestyle digital insurer. We are a full-stack digital insurer approved by Bank Negara FinTech Sandbox, protection partner by your side. The first of a kind in Malaysia and Southeast Asia, taking care of all the what-ifs, allowing you to live a worry-free life. Giving you the power to choose how to be protected in your own terms. A perfect companion in unpausing life. Pay for what you use when you use it. Thoughtful, caring, innovative, and committed. VSure.live is a young company of seasoned insurance industry professionals working tirelessly under the support and guidance of Bank Negara Malaysia's Sandbox initiative, revolutionizing the country's insurance industry. VSure.live showcases a minimum marketable product of its app for the first time to the world at RISE Conference Hong Kong in July 2018. VSure.live obtained approval from Bank Negara Malaysia FinTech Regulatory Sandbox Stage 1 on 11 March 2019. Launch of VSure.live web channel through an affiliate partnership with Hexa Afin Life, allowing us to offer eMedic, eLife, and cancer care insurance protections. Participation in 10 times 1000 Tech Innovators program by Ant Financial and MDEC in Hangzhou, China. VSure.live and My Angkasa Holdings MOU signing. Collaboration with MDEC's eBerkat platform. Participation in Plug and Play Insurtech Innovation Platform. Partnership with Fwd Takaful. Partnership with Create Wheels and iPay88. Obtained approval from Bank Negara Malaysia FinTech Regulatory Sandbox Stage 2. Closed pre-series fundraising of 12 million ringgit with Revenue Group Berhad. Official launch of VSure.live to Malaysia. Partnering purpose-based organizations to drive community care. Official launch of FlexiFit and EasyPA products. VSure.live aims to make protection accessible, affordable, and on-demand. Uplifting the P40 and M40 communities, ensuring that no one is left behind. At its core, VSure.live believes in tech for good, powering Malaysia's digital economy since its inception. 6 months into the market, VSure.live is making its way to becoming Malaysia's first digital insurer, offering on-demand insurance wrapped around your lifestyles. We are excited and blessed to have received encouragement from Bank Negara Malaysia, and we're just getting started.
All right. Yeah, a slight apology on the technicality of the videos, but I think it's meant to go a bit faster, but it's taken a bit more longer, but it's all right. I do have a few more slides to share with you guys to go through some of my perspective of where we are at the moment and where the industry is evolving into, right? A bit more about our journey. As you've seen in the video, there are quite a lot of things that we've gone through. We started our journey in 2018, where we came together as a founding group. We put together a proposition paper to Bank Negara. And in 2019, we got our first stage approval, meaning we qualify in the sandbox to look into offering on-demand lifestyle digital insurance product within the sandbox environment, right? And it took us nearly more than 2 years to go through the assessment. It took longer than expected, but within the 2 years, a lot of things happened. I wouldn't say is the journey we have gone through, smooth sailing, as you can see on the slide. I purposely did it in such a way that's so, so much information, so scrambled inside. I think within this scrambled information here, there are quite a number of defining moments that we have gone through. I think this is what the excitement of being in a startup, being a fintech startup, all about, right? In my past 27 years in the corporate, I've learned a lot of stuff. I've picked up a lot of skills, but a lot of those need to be unlearned, and I need to relearn, right? And this is where the excitement of being in a fintech startup actually is giving me, right? So the defining moments are, the things that define who we are, how strong we can be moving forward. I think, take notes of some of those defining moments that you will be encountering, and that will be the one that will shape who you are and your character moving forward, right? There are a couple of defining moments. The stage 1 approval is one of it that it came by surprise. We submitted our application for sandbox with very, very low expectations, and then we got it on the 11th of March 2019. It took us nearly 2 years to go through the assessment. We are on the verge of almost giving up as well, and it didn't stop us. Within the 2 years, we all, we also continue our exploration with incumbent insurers like AXA and Fwd and others. I think we work with them, and then we managed to get on board some of the products to put on our platform and offer it to the public, right? And the second defining moment is actually early last year, January 2021, right? where we received the final approval from Bank Negara that, we got stage 2, meaning we are allowed to commercialize our product to the market. Our product means, our own self-underwritten product, the product that we design as befitting to the market is on-demand, is utility-based, right? It's one of its kind. And that actually got us a lot of tractions. We attracted investors, and we finally landed our pre-series investment from Revenue Group. And from the investment, we got enough risk-based capital for us to launch our product. And then, we tested our product before we finally launched it in August last year. And since we launched last year, we have garnered quite a fair bit of attention from the media. And not just from the media, it's also from the partners as well, and charitable organization. We are also a big proponent of tech for good. We believe in subscribing to the ESG principles. Tech for good is one of the key elements within ESG, and we work with 3 charitable organizations since last year. Since we launched, we've managed to accumulate nearly about 30,000 ringgit. Contributed to the various charitable organizations. So within each of the products that we sell on our own product platform, we also embedded a CSR into that product, right? So yeah, I mean, it is fun, it is exciting, but it's also very, very tough for the last 4 years. I would say that my advice to some of you guys here venturing on their own new fintech startup or insurtech startup, always remember and capture the moment, the defining moment. What have you learned from there, right? So the last 4 years has given me a lot of learnings, and that actually built who we are and a character moving forward, right? Next slide. So yeah, let me just dive a little bit further when we talk to people about digital insurer and all this stuff, right? I mean, who we are and what we do, right? So a definition of a full stack digital insurer here, meaning that the company or the institution has the full suite capabilities from all the way from regulatory and licensing agility to product innovation, to design, to underwriting our own products, and also our go-to-market channel and end-to-end customer experience. Everything is digital, right? And when VSure went through the assessment from Bank Negara, we were assessed from the end-to-end angle, right? Yes, we are enjoying a lot of regulatory and licensing agility from a capital adequacy perspective, right? They're allowing us to launch our product without having the need to put in the full capital requirement, right? And they also assess us whether we do have our own capabilities, our actual team to design and innovate product. And it's not just about existing product turned digital, it's about product that is innovative, that is more market relevant and market adaptive, right? And also they look into the way we deliver services, right? Is it our operations, our technology, the delivery of the services to the customers, is it efficient enough, right? And also the way we distribute our go-to-market strategy, our distribution channel, our customer acquisition approach and strategy, all the way, end-to-end digital. But having said that, we also believe that, being a digital insurer, we need to be flexible in terms of distribution, right? Fully digital, yes, that's ideal. That's really, really ideal. It all depends on market maturity, right? So O2O, I still believe it's on O2O. I still believe in the agency channel. Being digital doesn't mean that everything is digital, right? It's about us contributing to an ecosystem that can enable a digital ecosystem, which includes O2O model, right? So yes, being a digital full stack insurer, we have the ability to underwrite, curate meaningful and impactful protection products. We have full control of our product design and how we want to delight our customer experience. And also having established a very flexible go-to-market strategy, whether it's fully online, D2C, B2B, B2B2C, or even O2O, right? So that is a quick definition of who we are, what we do, right? Next slide. In terms of our mission, very simple, 3 things that we are, our objective is to first deliver very innovative, on-demand, utility-based, affordable protection in an innovative way through technology. Basically, we are a fintech company, we are an insurtech company, so we want to deliver our protection in the most affordable, highly accessible way through technology. Second thing is that we are on a mission to also drive Malaysia towards a a more empowered social economic empowerment, where helping Malaysians to build better financial resilience. Hence, they should have a better financial life, right? And as I said earlier, the third one is that we are a big proponent of ESG. We support an ESG objective where we want to provide solutions and services that drive towards sustainable ESG goals. And one of the key areas is Tech for Good. We are partnering with charitable organizations like PerTV and all this Kachara Soup Kitchen, helping them to embed our insurance product within those programs where the premium that we collect, part of it is channeled towards all these charitable organizations. Okay. Next slides. Okay, here I would just want to pivot a little bit, not about VSure, not just about us, it's more about me giving a perspective of some of the Insurtech wave, especially the current wave, right? And here I would like to share from three perspectives. I think first is from a consumer and customer sentiment perspective, right? Where are we now, right, in terms of consumer sentiment? As you guys have seen or witnessed across the region, we are seeing quite a number of Insurtech, digital insurer coming into play. I'll talk about Hong Kong later. But the uptick or the trust level, or people, we're seeing the trends that, consumers are starting to trust, buying insurance protection online. As you can see from 2019 and comparison to 2020 and 2025, we are seeing a potential growth of nearly 30% on a year-on-year basis, right? So from a consumer or customer sentiment perspective, right, we're seeing a huge growth trends that's coming through where people are starting to trust the online channel to buy protections, right? People are seeing that, okay, now buying insurance is so easy and so affordable, and I don't have to really look for an insurance agent and do to get me a quote and all this stuff, right? So the huge consumer sentiment trend, growth trend in this, right? Second, I was look at it from a market maturity and the market player perspective, right? As I've said earlier, the last couple of years, VSure, we also benefited from this because we are seeing that big incumbent players like Fwd, like other players, they're very open to invite Insurtech like us to come into their ecosystem play, right? They're very open to work with us on co-product curations, on co-channel distribution and stuff like that. So it created an opportunities for Insurtech like us to continue to positively disrupt in this area. So I would say that the big catalyst here is the second perspective, that the market players are really opening up a lot of opportunities for players like us to come into play, right? And the third perspective here is obviously is the investment community perspective. As you can see, there's some big numbers there, right? Insurtech investment has surpassed 10 billion, right? And as you guys have heard from the news, Sunday raised a lot of money in the Series B, and then the latest one is Botech, Series A. They raised about 210 million. And that itself is a very strong indications that the investor community, be it private equity or be it family offices or VCs or even CVCs, right? As you heard from Fwd earlier, and they are coming up with their funds as well, right, to invest. In fact, Botech belongs to Fwd anyway. So you're seeing that investor side, there's a huge appetite for investors to invest in Insurtech companies that is driving innovations and coming up with the right USP that's very adaptive to the market. So overall, right, guys, the projections, my view, again, over the next 5 years is going to be very, very big for Insurtech like us, right? The key for us is, do we have the ability and capability to continuously drive innovations, right? Continuously come up with things that is very market relevant, market adaptive, and also be very innovative in collaborating with big incumbent players like Fwd, right? And of course, underpinning all this is also, we're also seeing the regulator across the region, be it like Bank Negara or HKMA, or HKIA in Hong Kong, or MAS, or even in Thailand, the regulators are getting a lot more, open, right, in terms of encouraging insurtech like us to go in and disrupt the market, right? Next slide. Yeah, this is just to show you guys the insurance landscape in terms of value chain. I can share the slide later. I don't have to dwell into this a bit more. Next slide, please. Yeah, a bit of some perspective from Hong Kong. Obviously, in terms of digital insurer in Asia, Hong Kong is the leading one, having more than about 5, I think 6 digital insurer license being issued: Bowtie, One Degree Blue, Avocado, and ZA. I think so. You can see that the framework they have over there is very much similar to what we have in Bangalore in terms of sandbox. And as you guys have heard from the news that in January early this year, Bangalore has published the digital insurer and Takafu operator framework discussion paper. So it's a good reference and a good indications that the direction that our regulators heading to is going to encourage a lot more positive disruption in the market, right? And in closing, the next slide. I just wanted to share my perspective about, what we do beyond protections. We're talking about innovations and stuff like that. I think I've shared these 2 articles in the My FinTech Week media press release. If you guys got time, go and search for it, and hopefully, the content may resonate with you guys. But 3 things I want to leave you guys from this presentation is that, first, look into impactful innovations. We are not saying that we need to be very creative, but look into impactful innovations, product or services or platform. Second, how do we come up with things that is helping to, be a catalyst into our digital economy as the government is pushing towards more digital economy. And the last part is, it is our role that we should come together to improve financial literacy across the board, helping to build better financial resilience, better financial awareness, so that we can live a better financial life. All right, that's my presentation. Happy to take on any questions.
Great. Thank you so much for the presentation, Eddy. I think we have a couple of questions in the chat box. To the rest of the participants, if you have any further questions, feel free to type it in. So let's go to our first question here by Ashikin. So Ashikin asks, in your opinion, how has the digital insurance scene in Malaysia changed in the past, and what will the future landscape look like?
I would say that amongst the players like us, Insurtech is a very good thing. It's also very encouraging from the regulatory perspective. But by and large, the public still require a lot more awareness, a lot more education. I wouldn't say there's a huge impact at the moment to the general public, because we are still seeing the huge protection gaps out there. It's nearly 65%. So I don't think we have made any huge impact out there, right? But it's a good start. I would say that what we are doing here, what Malek is doing, myself, is we're just starting a revolution, right? It still requires us to continue to be resilient and persistent in our pursuit to make a huge impact in the future. But as I've shared earlier, the 3 perspectives, right? Consumer sentiment is there, it's growing. Market players like Fwd, they are very encouraging, working with us, helping us to be more innovative. And the investors are also very encouraging. So the next 5 to 10 years is going to be a huge growth potential for Insurtech like us.
All right, thank you so much for that, Eddy. We have another question here by Lee. Since a big portion of the value chain is being digitized, how is Visha maintaining the human touch and also close interpersonal relationships with all your customers?
Yep, very good one. I'm glad that I did plan that some of the answers earlier, where I say I truly believe in the O2O model, right? It doesn't matter how much you can innovate, right? I mean, there's 2 parts. One is, you can innovate in terms of the products. You can innovate in terms of your service delivery to delight your customers using that user, the UI, UX, whatever you name it, right? So, but the human touch, still need to be there, right? As you can see that some of our peers, our regional peers like Bowtie in Hong Kong, They are even pivoting, or not just pivoting, they also have their own coffee chain, right? You can see that it's more evolving towards the individual lifestyle, right? As I've shown in the video, it's about unpausing life. So you will see that, in future, insurance are more integrated into using an embedded insurance model within a lifestyle ecosystem, to deliver that services. Like, you may not know in future that by you engaging in certain lifestyle activities, you are already protected, kind of way. I think that's the future, and it's a challenge for Insurtech like us to design product or to design technology to enable that to happen, right?
Thank you, Eddy. Moving on to the next question, we have Hamid here, who's from Boltech. Who do you consider to be your main competitors? And are you able to share some specifics such as current active policies, GWI, GWP, or claims ratio, etc.?
Well, Boltech is not competitors. You guys are huge, right? I wouldn't say competitors. The closest I can equate to is frenemies, because we still need to grow the industry. This industry is still very, very small, very, very small. I think we need to come together to build the industry together. I think one of the challenges that I see in some of us is that earlier, I won't say now, I think 4 years ago, I think there's a bit of reluctance to share, to talk together. Today is a good evidence to show, okay, like Malik and myself coming together to talk about things together, we share, and then we're going to have a lot more sharing. So we're going to see a lot more convergence of Insurtech coming together, playing together, working together to create a more formidable ecosystem, right? In terms of, since we officially launched our own product, since September last year, we've managed to onboard, our first product is FlexiFit, right? Which is a very tough product to sell, because when we submitted our product to Bank Negara was pre-pandemic, right? So, but it's pandemic time, so our product was suited more for pre-pandemic. But pandemic time, we managed to onboard nearly 1,002 policies for the last 4 months. And we've managed to, in terms of the amount that we contributed to the charity, was nearly 30,000 ringgit and stuff like that. So I think we are confident that we will be able to continue pushing more. There are 3 more products that is already in the pipeline with Bank Negara, submitted to Bank Negara. And one of the challenge from the sandbox players that most of our product is going to be, you have to go through Bank Negara review and approval. It's different from the incumbent player where they can file and launch. We can't do that. Most of the product have to go through a very vigorous review because of our limited capital that we have. So we have 3 more products pending to be rolled out. So I believe with the additional 3 more products to be rolled out in Q2, we'll see a lot more tractions on a commercial portfolio.
Great, thanks so much for that, Eddy. Another question here by Shazana. Could you share your experience participating in Bank Negara's regulatory sandbox?
This is, I would say, experience has been great. I came from the insurance background previously. I was part of Prudential, and my old perception of Bank Negara is always the policeman of the financial industry. So we always have this kind of artificial wall in terms of what we can show, what we can't show to Bank Negara. But what I've learned over the past 4 years in dealing with Bank Negara is that I was really surprised that they are a very forward-looking regulator. But Bank Negara being one of the few leading regulators in the region, alongside with HKMA and MAS and all this stuff, they are very open to innovations. In fact, it's through a lot of interactions that we had with them that we further embolden our confidence to pursue their digital insurance model, right, to be tested in the sandbox. So yeah, it's been very encouraging, very exciting, but at the same time, also rather frustrating. And I wouldn't blame the process or the system or the framework, but it's more of, Bank Negara making sure that, hey, we are ready for launch. right? They don't want to simply make a decision that, hey, you come in for application within 3 months, I'll give it to you. No, it doesn't work that way. So we went through a very rigorous process. So a lot of lessons learned for us. And yes, the waiting process is really very frustrating, but it's actually helped us to build patience in our, in us, right? So we build a lot of patience and waiting for the right time.
All right. Thank you so much, Eddy, and thank you so much, Shazana, for that question. Moving on to our next question by Johan O. Most advice out there for pre-seed and seed startups is to raise a runway for about 18 months to 2 years. Some companies that entered the fintech sandbox still can't graduate after 2 years. For fintechs building in a more regulated environment, what would your recommendation be for an optimal runway length?
First of all, let's accept this fact, right? And as Wayne introduced myself, I'm also part of a VC setup, so I can sense it from a VC investor side, right? Investor buy what you can sell, not what you can do. Let's understand that, right? And that's very real, right? We can talk about, oh, I can bring in this technology, I can do this blockchain, this and that, right? That's a given, right? You're a tech player, right? You're supposed to deliver that, right? But it's all about what you can sell. So once you have get past that, what you can sell part that can demonstrate to the investors, then we can talk about how much you want to raise, right? And how much you want to raise. There's no perfect formula. Seriously, no perfect formula. But the safe part is always, get yourself enough funding to run for 2 years, because just learning from our experience in Bank Negara, it took us 2 years from stage 1 to stage 2, right? So you need to have enough runway to burn. But the question is that, let's say if you don't have enough runway to burn, what do you do? That's the part that I talk about, the defining moment, right? Should you stop there? Should you do something? We decided to do something, right? We met with a big incumbent player. Like, for example, Fwd is willing to work with us to onboard certain products onto our platform. We can still start selling, right? Instead of you just waiting, right? The key is about you pivoting or making the right pivot to do something, right? To keep going. I think it's about keep going, keep moving, and then, but the safe period is about at least get yourself 2 years. Learning from my experience from Bank Negara, it took us 2 years. So it's good to have 2 years of runway. Otherwise, you need to really find ways to survive. Yeah, and always remember this: investor, buy what you can sell, not what you can do.
Great, thanks, Eddy. I think we have a couple more questions here. Zihan is asking, how do you see incumbents going into D2C view digital insurers? Would they be willing to cooperate?
A very good example is that our collaboration with Fwd is a direct D2C. I believe incumbents, if you look at insurance, guys, and if you look at different channels, agency is still the most prevalent, in the market, agency. But in the past, I'm sure you guys heard of DMTM, direct marketing and telemarketing. When I was in Peru, I was managing a group of DMTM. It was under my portfolio. And if you look at DMTM nowadays, they're practically disappear, right? They're just no longer available anymore. There are some DMTM out there, but I think the incumbent will see Insurtech, especially those Insurtech that's dealing on the touch point D2C, that doing the direct distribution side. Incumbent player would welcome Insurtech in that space to play with them, because they see us as more of an additional channel to help to distribute. And in insurance business, it's all about sales. It's really about sales. Insurance is all about what you can sell, right? And sometimes we may incur, some the cost of acquisition may be high, because we want to nurture our customer first, right? So I can't say all the incumbent, but I can safely say most of the incumbent players are very happy to work with us, as I've witnessed for the last 12 months.
Thanks for that, Eddy. Next question has to do with financial inclusivity, right? So how is Visha ensuring that the B40 community will be able to benefit from the insurance packages that are provided?
Yeah. First and foremost, I'm sure you guys have read the detour document, right? Digital Insurance, and in the detour, Vanguard talk about ICE. I think the first one is about inclusivity, the second one is about being competitive, the third one is being efficient. I just want to regurgitate that 3 points, these 3 objectives, right? Those are the 3 objectives that we are being evaluated during our stage 1 and stage 2 assessment under the sandbox as well. So the design of our product to make it highly accessible through technology, mobile tech and web, the price, the product that we price out there, it need to be affordable, and and the subsequent product in our pipeline also need to, the core design of the product need to meet the objective. So in future, a lot of our product will be very affordable to the B40, and that's just a product design, right? But we also need to establish the right distribution channel to reach out to the B. A lot of people talk about B40, but they need to understand the language of B40. And that is, some of the secret sauce that we are developing in-house that is inconvenient for me to share, but the distribution side is critical to really understand the B40 community, right? Whether it's B2B or B2C or B2B2C.
All right, thank you, Eddy, for the insights on financial inclusion. I think we have one final question here by Narayani. So, hey, Eddy, digital technology is changing what risks insurers cover. The increased scope for personalized, fully individual risk-based insurance might mean that some high-risk individuals will be denied cover or face prohibitively high insurance costs. How do you ensure there is a balance between the level of risk and also the affordability of insurance?
I think you're trying to dig more into my strategy. Xu Hao is our head of strategy is on the other side. I don't know whether he allowed me to share more, because the more this question is leading more into our secret sauce. And yes, overall, we have a strategy to go into that. We understood that as well. I think you are very spot on, and that is the predicament amongst the public, right? Especially for those people with pre-existing condition. How can we help them, right? And we do have our own strategy. It's going to be a combination. It's not just about affordability, right? It's about combining different technologies that we can leverage in the market today to give us the right data sets for us to make the right decision to offer the right protection at the right pricing. I know by saying this, Eddy, you're touching very high level. I just can't go into a bit deeper because it's going to my secret sauce, right? And yes, the keywords here is data. The keyword here is the technology that we need to use to build the right kind of information to help us do the right product to those people, people with pre-existing condition, right? So we believe there's a market in that space. It will be a combination of data and technology. I can't go further on that. Seriously, I know how it will be like stopping me.
Thanks, Eddy, for that. And I think regarding Narayani's question, Malik also, provided an answer in the chat. So Malik says, some high-risk individuals, through no fault of their own, will be locked out of insurance. For example, those with pre-existing conditions, and it's a social policy issue. For instance, in Singapore, the government steps in to ensure a national medical insurance plan with cover for pre-existing conditions. Maybe Malik, would you like to add on?
Thanks, Malik.
Sure. Yeah. So I think I guess I have experience in Singapore element. First, I guess the most basic things that Singapore does is make sure its public hospitals is very, very good, right? So that's the most basic stuff. So therefore, there's no differentiation when you go to a public hospital and then go to a private hospital, right? It's just that you get faster service probably at a private hospital, but you get charged maybe 3 or 4 times more. So that's the first policy. Second policy, then they have like, actually, let's have a national medical insurance plan. And the condition for all the insurers, and there's a consortium of insurers that are under that medical plan. They call it MediShield here. The consortium, they'll pass it to the consortium and they say, look, this consortium, who wants to be part of this consortium? About 4 or 5 insurers put up their hands. And then they say, one main condition is you have to cover pre-existing conditions. And then you basically balance, but the things you have volume, right? You have 5 million people population, and you can balance between this group so that you can, there's no cherry picking, right? So I guess that's how they do it. So it is a social policy issue, I think, that it is. Because do you want to do this? So I think that's the best way. I've always thought about private sector solutions to this, and it's really, really hard because if anything, more information gives you more ways of differentiating customers, right? And I'm like thinking, can we create an insurance policy where everyone who has cancer and is in remission for 5 years, can we pull them together, that they will insure themselves plus an insurance company backing it up a little bit as well in addition, and maybe of course higher premiums, but at least they get insured. The technology for we have peer-to-peer investments. I can't see why we can't have peer-to-peer insurance, but I think the question will be who is willing. You do need someone an insurance company or consortium insurance companies to go, okay, I'm willing to take on that risk of this less than, they call it less than clean skin, less than perfect type pool of things, right? Self-selected people who have cancer in remission. That's a tough one, and I think this is why Singapore went on and just said, forget that. Talking to insurance companies about this is like, it's really, really difficult. We're going to do it on our own because we are the government. We take tax revenue and we're going to pump it into this, right? So there you go.
Yeah, I think Malik, you're absolutely spot on. I think it requires the government to give a push, like Obamacare and all this stuff. But there's still a chance for us to push through this. I would say the community that we're building here, right, in the Insurtech space, we can make something happen in this space. Depending, I think let's give it some time. I think what Malik says is exactly some of the secret sauce that we are marinating at the moment. So hopefully we can actually leverage on this community that we are building here to do something for those with pre-existing condition.
Great. Thanks, Eddy, and thank you, Malik, as well, for sharing your insights from Singapore. I think now we will move on to our final question here by Andrew. Andrew is asking, hi, Eddy, what strategies do digital insurers like Visha have to protect your niche against deeper pocket insurers? Current insurers don't need detour to go digital, and a price war is bad for the industry. Any insights you could share?
I think the strategy for us has always been focusing on the B40 and M40 segment, where we're trying to target those that does not have deep pockets, right? But what will attract them to come into our space of play is the innovation that we're providing out there, because we are offering pay-per-use kind of thing. I think regardless how deep pocket you are, if you are given the options to pay for things that is more affordable, they would want to try, right? And in our strategy is that, yes, our core strategy is UBI, usage-based insurance, but we are evolving towards UBI plus embedded insurance model, which we eventually be going into subscription-based insurance, SBI. This is where we foresee, like I've shared during the Astro Avani interview, they asked the same question as I think what Andrew asked, is that I think in future we foresee that there's going to be an SBI model where, let's say, Eddy, I used to pay 2,000 ringgit a month for my insurance, which comprises of my car, my home content, my PA, my life insurance, everything all bundled up. I'm paying about 2,000 a month. So in a year, I would probably be paying about 24,000, right? What we hope to do by leveraging on technology and certain innovation in product and all this stuff, a combination of UBI and all this stuff, instead of Eddy paying 2,000 a month, it's going to be fluctuating. Eddy, this month he can choose, right? He can cherry pick based on some AI that he probably end up paying 1,500 for January, 1,008 for February, and then maybe slightly more on March. So at the end of the year, instead of Eddy paying 24,000, Eddy could probably be paying about 18,000 or 20,000. So Eddy save 4,000. That's the concept. I think that's the concept. I believe we'll be able to attract some of the those people in the deep pockets segment to come into play in this area.
All right, thanks so much, Eddy, for that. I think someone asked in the Q&A, what is UBI? UBI is usage-based insurance, right?
Yeah, usage-based insurance.
I hope that answers your question soon on. All right. I think that comes to the end of our session with Eddy. Thank you so much, Eddy, for joining us today. And I'm sure our participants have benefited greatly from your sharings and experiences as well.
Thank you.
Thank you so
Thank
much,
you.
Eddy.
And thanks, Malik, and thanks for your views just now from Singapore.
Hey, no worries. Happy to.
Thank you, Eddy. Moving on, we have our second and last speaker for the day, Malik Ali. So after founding and leading BFM Radio 89.9, Malaysia's only business radio station for more than 10 years, Malik entered the Insurtech industry with his latest venture, Life, which acquired Malaysia's first online life insurance business. Life seeks to disrupt traditional distribution systems of life insurance companies by offering consumers direct, online access, and immediate cover. Malik's latest venture continues his career theme of bringing new products to market, which includes his stints at Yahoo, JobStreet, Maxis, the Boston Consulting Group, and law firm Allen & Overy. Currently, Malik sits on the Asia Pacific Advisory Board of Harvard Business School, where he earned his MBA. Malik is also a law graduate of Bristol University. Without further ado, Malik, you may take the stage.
Thank you. Thanks, Wayan. Please read sorry, I can't help myself but just get involved in some of the conversations and your questions and all that. So keep them coming. I will look at them. And if you want to ask questions, even on video, please, I'm sure Wayan will let you. She won't block you. She'll let you come on. Yeah. So interestingly, yes, I'm in media, and I remember the one, some insurance executives looking at me and going, Malik, why are you going into insurance, right? Given the fact that I've been in media, I've been in technology. I think my first technology experience was at JobStreet, right? When we offered, when we competed with the traditional newspapers, right? For those, remember those thick pages of classifieds and the thick pages of recruitment pages in New Straits Times. We disrupted all that in kind of like year 1999, 2000. So why did I go to insurance? I think one thing was because I think I like to enter industries where there is a lot of, I think, not the word is not waste, but there is value is being taken up at the wrong place, right? So right now, particularly the life margins in general insurance industry that Eddy is in, maybe it can get 10 to 25%, right? But the margins in the life industry is actually between 160 to 200%, right? Of your annual premiums, which is actually really it's fat, it's inefficient, it takes the value out from consumers to distributors. And who are distributors? It's agents. It's really people who sell you the things, right? So sell you the insurance. That's where the value is being sucked out of the industry right now. Even the insurance company does, in terms of profitability from the insurance products, is actually equivalent or less than the distributors, right? As a whole. And when your insurance agent, and when insurance agents come through and they drive Mercedes, have beautiful houses and all that, is on the back of that distribution system, which is fine, it's good for them. I mean, they kind of like they do that, but at the end of the day, there is inefficiency in the system, and that's why when I see that, I get a little bit uptight, right? So, and that's where the entrepreneurial sort of adrenaline comes in, and one wants to do something about it. So. Cycle back, and now let me just share 3 or 4 slides, and let me just cycle back to when we had one of our, actually the first time I encountered when I really thought about insurance was when I had my first child, and that was in year 2001. And in that year, and in that year 2001, I was like I was still relatively like, oh, what's going on, right? So trying to find insurance policies, and I just found that everyone I spoke to was trying to sell. And it was really hard to speak to someone who was really. And so honestly, I didn't do much about it. I just got a very basic thing, very basic policy. And so I thought something's wrong here. And then I was with JobStreet at the time, and then so JobStreet listed, and then I started talking to other people, right? So after JobStreet listed, you get other kinds of calls, right? Because you participated in the windfall of a listing. So I got private bankers calling me, right? Private bankers and and so on, say, hey, Malik, we have this for you. And then they introduced. I remember the kind of things that they were introducing to me, insurance policies, and I'm like, and this insurance policies cost. It's crazy. It costs ringgit 1 million, right? They call it single premium policy. I'm like, So I'm just trying to do my math and going, how does this work? And everyone, even private bankers, try to sell, right? No one really is out there to kind of like look after your interests. Everyone's trying to sell to you. And then I came across one article in a Singapore newspaper, and there was a person there who was an independent financial planner. And through one article, he explained simply what the industry was. I mean, what we ought to get as parents, as you know, and so on, the basics of insurance, right? And so I went to this person and this company and really got a really low down, and it made sense. It was very simple. It really made a lot of sense. Basically buy insurance for insurance, buy investments for investments. Don't mix the two things. And I'm like, yeah, that makes sense. So. And then I thought, I kind of course, I bought all those policies and so on, and that were relevant. It saved me a lot of money. All the commissions that I paid, that I was supposed to have paid, was returned to me because this guy was an independent financial planner. I can tell you, those commissions were a lot, right? I mean, I was shocked at how much I got back when the commissions got back, not to the distributor, but to me. So that created this little sort of inception in my mind about things. Then what happened? Okay, then this happened. I was at BFM, and there was this new insurer that came on stream. They were a company called U4Life, right? Now, U4Life actually was, I admit it, FiLife is not the first online life insurance company. U4Life was the first online life insurance company. You could buy directly life insurance online through U4Life. Now, who's U4Life? U4Life is a partnership between a reinsurer, a German reinsurer called Hannover Re, and a New Zealand technology company, right, that provided the technology for offering this. And how I knew them, because they advertised on BFM, right? So they were advertising on BFM. And when I heard the advertising, I was like, fantastic. At last, at very, very last, we have someone who's trying to disrupt the market and who is actually promoting products that I bought when I was when I was looking for insurance. And these is like basically term life insurance, very simple, plain vanilla, nothing complex. You really do not need a sales illustration table, because the sales illustration actually is just premium year 1. And if you buy level term, premium year 1 is the same as premium in year 20, and that's it, done. And you get, if something happens to you, you get $1 million, or whatever it is, right? No sales illustration table of like allocated, non-allocated costs, policy management fee. You guys have seen the sales illustration table. There's about 9 to 10, 11 columns, right? Whereas this one is just 2 columns. Actually, not even 2 columns. It's just one number, right? Okay, you pay, $3,000 every year for the next 20 years. Done, right? So that's what U4Life did. So when they came on market, I'm like, fantastic, someone did it. I wish I did it. Never mind, at least someone is doing it. I can just, I'm happy just to, promote them and be their, be BFM's advertiser. Unfortunately, it wasn't very easy for them, and they went through a little bit because, there is, for us that thinks that technology can solve everything, there are sometimes we have to take into account some industry axioms that people learn through experience, right? And one of it is, insurance is not bought but sold, right? There is a reason why there's an agency distribution system. There's a reason why there are agents knocking your doors, in a way pressurizing you to buy insurance, because it's not an on-demand thing, right? It's not like, every time I meet an insurance company, go to Malik, no one wakes up in the morning wanting to buy life insurance, right? And that's true, right? So you do need a certain element of, I guess that's why you have agents, people who actually say, you know what, this is good for you. So there are value-added agents. Is this good for you? You need to do this, and so on. But I think the fact is that it's gone too far the other way. So I think what happened with U4Life was that they relied completely on marketing, and I think that's where. They got into a little bit of like, oh my gosh, this is not, the numbers are not as good as they thought it was going to be, and therefore after a while they said, we want to get out of this business. So they put up U4Life for sale, and as I was their, I guess I was their media company that advertised them. I said, hey, I'm interested. So yeah, we managed to do a deal where some of BFM shareholders and myself. We bought over U4Life, and because we thought rebranding, we really did not want to rebrand, but because U4Life was so close to another big BFM client, which is U Mobile, we thought, oh my gosh, we better rebrand it slightly. So we did start with FI standing for financial independence, finance information, and so on, finance and investment, whatever. I use a BFM style. At least, but it means about financial independence, and I think we can. I decided to do that, lah. Yeah. So this is as you say on the slide, this is a timeline. Youth for Life, 2013, 2015 when they launched. So basically, between Youth for Life and Fi Life, we've been around for almost 7 years, right? So you can imagine how someone raised the point just now. When you're in a sandbox, it takes 2 years. When you're in, if you want to do a real commercial business, yeah, this is a 7-year timeline, right? And you have to fund yourself for those 7 years. And so I think in that sense, in what I've realized in this fintech industry, that you must have build either the ability to access funds, or you have very deep pockets, or you have you need to be able to manage your cash burn rate, so that it is, you can whilst waiting for regulator to come back on a few points and things like that. As you say, I mean, Eddy said it, he took about two years, going to and fro. You need to be able to manage your, you can't have everyone on your salary books earning 100%, right? Because otherwise you cash burn really, really badly that way. Instead, you kind of okay, guys, you stagger it so that you say, when things are hot, we'll all go in full time. But in the meantime, we need free advice, we need this, we need that kind of thing. So I think, managing the difference between this, for example, manage the difference between BFM and Fi Life, for example. In BFM, within 1 year of the license, we launched, and within the 2 years of launch, we cash flow positive, and everything's by third year, fourth year, I was like, phew, then BFM is on its way. For insurance and Insurtech, it's a lot longer. It's almost like it really feels like a marathon. I mean, BFM felt like a half marathon, maybe, kind of like a thing, but a 10-kilometer run. This feels like the whole 26 miles, right? So that's one thing one feedback I have about people in this thing. Make sure you try to have access to funds, either raise it beforehand or sort of make sure that you have commitments over a few years. A lot of people won't give you cash 20 million just like that when you're just starting out. But if you say to them, look, can I space it so that I'm raising 1 million now, and then I raise another 1 million next year, another 2 million next year. But I want you to commit to 3 years so that I can, I can progress. Then I think that some investors will look at that favorably, right? You give milestones and so on. So that's the timeline. So 2015 was when they launched. We took it over in September 2018 and relaunched it in May 2019. We're now in 2022. We added one more to the portfolio. I mean, we're still right now, at the end of the day, we are still a distribution partner to Tokyo Marine, who is the main underwriter for our life insurance, and AXA Afin, which is our medical side, right, on a medical insurance. So to a certain extent, I am a distributor as well. I'm part of that distribution value chain, and I want to get out of that, right? Basically, because I want us to be direct, really, truly direct, right? So I think it's great possibilities, and let's see how that pans out. But at the end of the day, I still feel, although a much high, I think my long-term goal is to make sure that the margins in the life insurance side is the same as the general side. Meaning, right now, if someone were to sell you a car insurance policy, it's about 10% commission, right? If you sell you something else, maybe it's maximum is about 25%. I think we should get there. We should try to get there. Life insurance should try to get there, really getting into those kind of distribution margins, right, between 10 to 25%, rather than between 160 to 200%, right? That kind of thing, right? So that's the idea. And so this, I was just plotting out some charts, in terms of if you were to really go into what kind of insurance that Malaysia has, the market seems big because there's, about almost 2/3 of Malaysians do not have life insurance at all, and this is where I think it's a glass half full. So you're talking about basically 7.8 million working adults that do not have life insurance at all. 3.9 million working adults in T20 and M40, and you expect these guys to have life insurance. They don't, right? There's 4 million of them that don't. And even so, of those who do, the average size sum assured is about only 130,000, right? And we're talking about our EPF. We're talking about what's our basic retirement income they talked about, 240,000, right? We don't even get there. Basically, the sum assured is only 130,000, and there's a reason for this. The reason for this is because I think the market has the insurance industry has educated the market to buy something called investment-linked insurance, right? And unfortunately, investment-linked insurance is one of the most expensive insurance you can buy, and it doesn't really fulfill the real thing. It doesn't fulfill the insurance side, I can tell you. The fact that this is 130,000 is what they go is the average one is woefully inadequate, right? That means you're not covering the insurance side. What basically you're doing is you're doing this, right? You're basically trying to fulfill the best. You're using one product to try to insure as well as to try to invest and save and invest. And actually, it doesn't work for either. So I think that's the role of Fwd Life, is to basically break it, go back to first principles. Go back to first principles. Hey guys, hey consumers, buy insurance for insurance. Don't get 130,000 ringgit cover. Get 1 million ringgit, because you're 30 years old. We can get you 1 million ringgit cover for 17 ringgit a month. And you want to do that for 20 years. You want to keep it flat for 20 years. It's about 26 ringgit a month for 20 years. And we can give you 1 million ringgit cover, right? You can't get that with investment-linked insurance. That will cost you at least 200 to 300 ringgit, right? 200 ringgit kind of thing per month. So that's the idea. The idea is that we split this. We go back to first principles. Unfortunately, the industry has evolved to somewhere where they've gone beyond first principles and come up with products that not really targeted towards value to you as consumers, but is maybe like, how can I get people to buy this product to our distributors, right? And products that emerge give a lot of face and give a lot of financial incentives to distributors. And because of that, consumers are not adequately protected. So, and that's why we're in the space, and that's why we're like, we want to make something of it, and so on. So that's fundamentally it. If you wanted to see, if for those of you who are not familiar and wanted to see a little bit about how it happens, it's instantaneous. Basically, you get a quote, enter a few details. So I'm male, I'm non-smoker, hopefully. We also even have vapors you want. Let's say I'm, let's say 30 years old is what? This 2022, so it's 1992. Sorry, I'm going all the way down. Let's say you're in, you pass June, I think. Let's say May. I'm employed. We need this just to find out a few things about you, and then you get a quote. So here's a 30 or 29-year-old. I can't figure it out, but there we go. 1 million cover. Sorry. 1992 is 30 years older. Sorry, I got wrong numbers here. Sorry, you got it for 158 a month. Sorry, I got it wrong. For some reason, I thought it was 17. Sorry, my fault. But basically, you can get a 1 million ringgit cover for 158 ringgit a month, right? So that's what we, and then you just apply. And then, and so on and so forth. And then basically we can offer you instantaneous life insurance immediately online. So I guess that's the idea. Keeping it simple. You can do this process in about 10-15 minutes, get it online. So I think that's the idea. And we've been doing this for the last, I guess since 2019, we launched this in May. Fwd Life has done this in 2015. I must confess, it's not been easy, because I think the industry has really sort of a lot of people say, hey, what if I don't die? Yeah. What happens, right? Do I get any money back if I don't die? And it's really hard. I mean, I thought it would be quite easy. Basically, the answer is, if you don't die, first thing, that's really good. You are, first thing, it's really good. You are there. You're still earning an income for your family, etc. That's the first thing. But secondly, it's you pay the premiums so that if it's not about paying premiums so that you save, it's about paying premiums so something bad happens to you. It's about to protect yourself against calamitous, really crazy events, right? That and so on. And so therefore, there's no cash value, right? Meaning, hey, if you live on for that 20 years, you live on to become healthy. You're healthy. There's something that's a really good thing. But yeah, that $200 ringgit per month that you pay every month for that 1 million cover is not going to sort of be returned to you in any form, right? So that's the thing. But because of that, it's cheap. You can get it. You can get yourself covered, and you're sorted. So I think that's the idea. Once you introduce investment link into it and all that, what then you get? Then you get some. Then basically things get mixed up, and you will probably pay in excess 3 or 4 times that to achieve the same amount of cover, and also, but of course, you get your cash value as well, but that might not be sufficient. So I guess that's the summary of it all, and happy to answer any questions. I guess my feedback is my thoughts basically come back to the following. My thoughts is that it's Insurtech is not an easy space. I've been in businesses before. I think even Job Street and BFM are easier spaces. I think because there's a huge regulatory component and prudential component, making sure that you have well capitalized, you can pay all the claims. So there's a huge consumer protection going on. And as Eddy mentioned, there is the good news is that you have an arm of Bank Negara that tries to invigorate and tries to be very, very, very sort of inclusive. I mean, sort of want to see the industry improve and bring on new technologies, but they also have to make sure that consumers are not swizzed, right? We're not giving false empty promises and so on. So that's the idea, and I think I think Bank Negara are I mean, My FinTech Week. Most of you have attended My FinTech Week. You've seen the kind of like progress that they've made. And the kind of emphasis that they want, and so there we are. But yes, it is a long runway. You have to capitalize yourself. You have to watch those outgoings. Make sure you are funded for a marathon, not a half marathon or a sprint.
All right, thank you so much, Malik. So I think we can move on to the Q&A session if you're ready.
Yes, I am.
Yeah, okay. So I think we have a handful of questions here. First question by Jasmine. Hi, Malik. In the near future, insurers will play an increasingly prominent role in the health of their customers as life expectancy increases and health trends change. So if that's the case, what will the future look like for life insurers?
I think I don't think anything fundamental has changed. Meaning, if you're if there's changes in lifespans and all that, it is already provisioned. I mean, it's not as if that we are experiencing higher lifespans in other markets, right? Malaysia's lifespan is increasing, although COVID slowed that down a bit. But what happens is that when you go to I don't think it's not an issue for life insurance. I think basically we have provision for that, right? I mean, for increasing lifespans and so on. In fact, if anything, I have seen more, sort of the premiums between Singapore and Malaysia, and actually premiums in Singapore are cheaper than in Malaysia, right? Why? Because our mortality rates are higher in Malaysia, right? People die younger and more frequently in Malaysia. So therefore, if these things improve, premiums will improve. I think is only a positive. If things improve in terms of health and life, premiums will improve. So that as always, if there's a smaller risk of incidents, then basically smaller risk of payout, the premiums will improve over time.
Thank you so much, Malik. Our next question is pretty similar to the question raised to Eddy previously regarding financial inclusivity. So how is FiLife playing a role in ensuring availability and accessibility to promote a financially inclusive insurance landscape in Malaysia?
Okay, So I think, remember that I said about the 63.5% people are not insured in Malaysia right now, right? So in that sense, that's where we're targeting. And I mentioned about 3.9 million people in the T20 and M40 groups that are not even insured, right? Have life insurance. So that's where we play. So I guess what I'm saying is that, I remember I posed this question to Bank Negara, right? When they say, hey, you need to, what do you mean by underserved? Do you mean the B40 group, right? And the answer was no, right? The answer was no. I mean, that's not our definition of the underserved. The underserved are even people who are, it's not necessarily based on income, but also based on what they ought to have at their income groups, right? At their income levels, what they should have. And right now we see 3.9 million people, even in the higher income groups, are not getting that. So I think inclusivity also includes people who are, earning a reasonable income. So we are, there is, I do believe that there is, when you have, when you are the sort of people that will buy insurance are the ones who have at least a little bit more of a disposable income, meaning, after they pay for their life necessities, right, they have a little bit more to then say, you know what, yes, I'm going to park aside some for my investment, park aside some for the protection of my children, as protection of myself, so that my children are okay. So there is and there is a disposable income element, and if you look at any insurers, you do market studies and all that, you see the insurance pickup goes up when the income levels of a country goes up, right? Then the penetration goes up, right? Generally speaking, right? But if a country is poor, let's not even talk about it, lah. If the country is poor and people are just basically on subsistence, people do not have disposable income to buy insurance. Yeah. So then the second question is, if you want inclusivity by everyone, right, for everyone, then again, I've been a big proponent, in the same way that we talked about just now about pre-existing conditions. I'm a big proponent about an institutional approach, right? Basically, that, can you imagine, for example, okay, again, let me use examples that I know better. I know there's a mention here of Ailindung. I've heard of Aitenang. There's also Ailindung. I have to get into that, but I'm more familiar with the ones in Singapore, simply because I'm actually a member. I'm a member in both, but Singapore has been innovating in this space, so I see it as a member. Automatically, when for my EPF in Singapore, they deduct $250 a year for a 70,000 Sing dollar cover, right, a life cover, and basically they do it for everyone, right, and whether you don't even have to ask for it, it's an obligation. But if you say, no, actually, Singapore government, I don't want that because I have my own insurance, you can opt out, right? So what I'm trying to say is that there is institutional, I believe in institutional support for programs like this, where you make sure that everyone has a base level of life cover, just essentials. You don't have to make sure that they have base level of personal accident, but you have a base level of life cover, you have a base level of disability cover, right? And you have a base level of medical cover. And in fact, Singapore actually, what it does is actually says, you know what, actually a CPF, we're going to divide it, we're going to have one special account for you, which is called the MediSave account, right? Which basically all your money that goes into, you deduct that 10% of your CPF contributions go into that MediSave account. And that MediSave account pays for insurance premiums, right? That's the most efficient way of doing it, right? For you to do that, and maybe sometimes they pay cash if if insurance doesn't cover it, but that's the kind of thing. So there is a lot of institutional help, and I think asking the sort of private sector to develop this is really, really hard, because at the end of the day, the information is with EPF. In fact, EPF can become a completely captive insurer if they want to be, right? Because they have data on what's the mortality rate of the EPF members, what's the mortality rate of PNB members. They have these things, right? And whether they want to outsource it or do it or become a captive insurer themselves, they can if they wanted to. If they really felt like doing this, they can. So I think in terms of a base level of cover, it needs institutional help. Otherwise, people without disposable incomes will not even think about insuring themselves, and then what happens is it becomes a cycle of poverty, right? Your breadwinner, who is a platform worker and kind of thing, dies, then the family goes into subsistence, even more subsistence. Kids come out of school, and then the cycle of poverty happens, right? So I think we need institutional help in that sense.
All right, thanks, Malik. Since we're on the topic of institutional help as well as Singapore, we have a question related to that from Sun On. Do you think that EPF will introduce EPF Life like CPF Life in Singapore?
It's it is, I don't think we have even, honestly, we don't have the savings. EPF does not have the savings amount. People are not saving, they don't have enough in their EPF accounts to implement CPF Life. So for those of us that don't know, CPF Life basically is buying a pension. What Singapore government does, it says, you know what, actually, you guys save all your lives. You cannot withdraw all your CPF money, right? When you're 55, right? They say, stop, cannot withdraw. Actually, you can only withdraw if it's above, I think it's 180,000 Sing, right? They call it basic retirement sum. And with that 180,000 Sing, they say, okay, what we'll do with this money is that we'll give you a pension for the rest of your life from the age 65 onwards. So 10 years, you don't do anything with it. 65 onwards, they give you, 1,000, 1,800 to 1,000 a month for the rest of your life, right? With that money that you've saved, right? And then anything above that amount, you can withdraw, of course, right? In Malaysia, we don't have enough people who can cover that 240,000 ringgit basic retirement sum that we've set ourselves, right? And even so, can you imagine the political capital required? And Singapore went through this. It was really, really hard. People say, oh, you're trying to keep our money, and there's gripes all the time. I remember when they tried to push this legislation through, it was so tough. They suffered politically because of that, right? But they were willing to do it. In Malaysia, we know political will definitely for this sort of thing. Not only that, you don't have people covering the 240,000. And you can only do this if you say, you know what, actually, yeah, everyone's up to 240,000. We think we can do this. Then you can do it. But can you imagine right now if you do say to people, Malaysians right now, sorry guys, you cannot withdraw your money 55. We have to keep it for another 10 years, and we give you a pension after 10 years, right? Not easy. I don't think I'll ever see it in my lifetime in Malaysia.
Maybe in my lifetime.
Possibly. But you need some really people who are willing to lose elections because of that, right?
Okay, thanks, Malik. Next question here by Felicia. Why do you think there is a lack of awareness in the general public to take up life insurance despite the ongoing pandemic?
I think it's one of those things. I think there might be some element. It's just that it's not as simple the way it's presented. It's never presented simply. As I said, you want to see that sales illustration table, right? It's crazy. I don't understand. I didn't understand it when I first 5 years ago when I took up my first copy of a sales illustration table. I couldn't make the numbers add up. And once I did the Excel spreadsheet, I tried to add up the numbers to make it balance. It didn't balance, and the reason because there's a lot of cost, right? So I think once you have that kind of scenario when the products are complex, you make the situation a lot worse. I think we got to go back to first principles and make products simple, and sometimes. And again, say this is where you need institutional help, right? In Singapore, you don't have to understand life insurance to be able to get life insurance because you have your CPF going. You know what? You don't have to think about it. We're going to think for you, and we're going to deduct it from your thing. Don't worry, it's good. If you are knowledgeable and want to opt out, can. But if you're not knowledgeable, it's okay. We got you covered, right? So I think in that sense, you use. I think we in economics we use this thing called nudge economics, where you kind of have a default position and you nudge people to take up to do certain things. I think in this case we have to be a little bit more paternal about this. We have to be a little bit more, a bit more sort of a bit more paternal in the sense of we need to kind of know that this sort of things is not top of mind or from people, and therefore get them in a position where when they don't know but they're actually covered, right? So can you imagine you buy some Amanah Saham Nasional, and in the dividend that you get paid, there's a deduction for your life insurance, right, every year. You don't know about it, but then what if something does happen to you, suddenly you get a letter from PNB saying, hey, here's 100,000 ringgit for your here's to your family, right? Here's a check for 100,000 ringgit because you have because your breadwinner had an PNB, they invest in Amanah Saham, but there's also a provision here for life insurance that we deducted. Here's 100,000 ringgit for your family, in addition to his Amanah Saham, right? Can you imagine that happens and be like, wow, it's like people be so like, oh, I didn't realize this was there. But suddenly word will spread, right? Oh my gosh, I got 100,000 from Amanah Saham because, and that's so helpful, and I managed to pay for my children's education, and it really helped me a lot. Our savings was only 50,000. Word will spread like wildfire, right? To say, hey, you know what? Don't just invest a bit lah. Don't worry. They make sure you cover. If you invest more, you get more insurance cover, something like that, right? So there we are.
Right, thank you for addressing that question, Malik. We have another interesting question on cryptocurrency. So by Dinesh, cryptocurrency is a highly volatile and risky industry with a huge potential. So I'm just wondering why there hasn't been more activity in the insurance space to help protect value and ensure against certain risks in this fast-growing space. And what is your view on this?
Yeah, insurance companies are already quite conservative, right? You ask them to insure cryptocurrency risks. You're like, I don't think there's a single insurer in the world that will insure cryptocurrency risk, right? I mean, you're swinging 20% up and down in a day. Who wants to insure risk like that? I wouldn't. I would not even insurance, right? We're talking about even an investor risk, right? Yeah, it's just like playing a very speculative stock. It's like and you go up 20%, down 20% in a day, and I'm not sure whether that's the purpose of insurance, really. I mean, go invest, fine, go for it, right? But there are other areas which I think I'm being a bit glib, right? But there are other areas where it's important. For example, suppose, is there an insurer out there that's willing to say something along the lines like okay, with this cryptocurrency exchange, we guarantee that there's no sort of fraud or no fraudulent use or no sort of unauthorized hacking into the system, so that you can get away with, people can run off with your digital cryptocurrency. I can see stuff emerging in that space, maybe, but I think there's a bigger challenge. There's even more mass market potential. Even before that, is basically along the lines of cybersecurity insurance, right? Ransomware or ransom thing. So I think companies are already trying to grapple with the kind of like the more mass product as opposed to cryptocurrency. Or cryptocurrency exchanges, but they're trying to figure out how to do cybersecurity insurance and trying to get a feel of like what premiums should they charge, what's the likelihood of incidents and things like that. I think there are some interesting players in that space, and they are actually they're taking a huge risk, right? I mean, they are trying to price that risk, and and hats off to them, right? Those guys. So I think there's a lot more to do before even cryptocurrency exchange risk, things like that, and there's a lot more to do. I mean, and I think there's a lot more to do and much more fundamental things to do than trying to insure against. I mean, no one insures against even stock market. You buy stocks. Does anyone insure against the risk of your stocks going down? I don't think I can find that insurance. At least not ones that will offer reasonable premiums anyway. Right?
That's probably the hedge funds people doing it. It's not insurance people doing it. It's the hedge fund people.
Exactly, and you need expertise. And you need expertise, and you need to and sometimes things go completely crazy, right? I mean, long-term capital management. I think, Eddy, you probably heard about LTCM. The last time Russia imploded, right? In 1990, was it late 1990s? Russia imploded. The stock market imploded. One company just went completely bankrupt, right? Because one hedge fund went completely bankrupt. Right? Yeah.
Thanks, Malik. So circling back to the topic of insurance awareness, Alan here is asking, if there's still lack of awareness when it comes to insurance, definitely consumers would have a lot of questions about, the insurance product, etc. So what is FiLife doing to help address this?
Yeah, so it's block and tackle. So we write articles, we do webinars, we send email newsletters. We come to forums like this to answer those questions, and wherever we can. So it's and I think everyone's doing that, and and so on. And I'm on social media a lot talking about not just insurance but EPF and CPF and things like that. And so it's like you're trying as much as possible to sort of to spread the word, right? And I think everyone is trying to do it, but the thing is, sometimes what I feel is that what's really difficult is that, and I've seen, there is a video of me, right? There was one video of me where, this a video of a video, right? People commenting on your video, right? For example, they do a video of them commenting a video. I remember talking about term life insurance, and then there was someone else actually commenting on my video saying, "Hey, this is correct, this is wrong, this is correct, no. So you're countering even against this sort of normal social media kind of like objections or disagreement, and you have to come back and have a little bit of like a debate on social media, right? Because you File Life is just 8 people, right? But agents are like thousands strong, right? So you're fighting against quite a and if one agent puts up 10 comments, and 8 people, how many comments can we make, right? So sometimes there is a lot of sort of in this not there is this sort of a pool of folks who actually, honestly, yes, it's true, because their rise bulls depend on it, right? But I think there is scope for them to move on to advisory, really truly independent advisory services. I think that's where intermediaries need to go into. Basically, they need to pick up true advisory skills that not represent the insurance company, but represents the consumer, and say, you know what, yeah, this is a great product because I'm truly your agent, right? I'm the customer's agent. I'm not the insurance company's agent, right? I think we need to intermediaries need to move to that space, and like me, I was willing to pay. I was willing to pay someone at the time 3,000 equivalent of 3,000 ringgit to sort out my my financial planning and so on. And in return, I got back 20,000 in terms of commission returns from premiums, right? So I think we need to move there. Intermediaries need to move there. Otherwise, it's not really value added. You're just you're basically part of a distribution channel that's just trying to push product to people. Having said that, I must say, and this is where I like to bring Eddy in. I must say that one thing I've learned about being in this industry, and for those of you who are startups in this space, I mean, FWDs, you have the general side as well as you have the takaful side and the life side. Not necessarily in Malaysia, but elsewhere. But actually, the general space, the general insurance space, is where the volumes are. Meaning, education level is not as high. You should. There's one. We had breakfast grill this morning where we had Rohit Nambia talk about the general space, and the general space is actually high volume, and some of it is regulatory, compulsory, like cars and so on. There's travel. There's of course there's medical and things like that. But what we're trying to say is the general space is where the volumes are, but the life space is where it's a lot. The education level is a lot higher required, right? And so on. And I think. File Life we have found ourselves in the life space because we bought over a company that is life, pretty much. And I think if one thing about, if I can comment on the general space, I remember the reasoning behind this thing, and I think this is for you guys, right? In the Insurtech space, whether you choose life or general, the one thing about the general space is that it's because it's high volume. The people who are really can really make this work are those who have some ecosystem or distribution advantages, right? What do I mean by that? Okay, MyEG, right? MyEG, what are they known for? Cars industry, right? You want to renew the road tax, right? And then when you have to renew road tax, what do you need? You need car insurance, right? Right. So what MyEG managed to develop was they managed to get concession to basically do the road tax renewal, right? And then they leverage that. So they get $5 or $10? I can't remember what it was for fee for road tax renewal. But then in addition, they get 10%, right? For 10% of your car insurance premium, because you need to pay your car insurance before you before you get road tax issued, right? So that's a natural, what I call natural distribution capability. You already got a monopoly on the car road tax, and then you plug in the insurance part, then you get 10% of all the premiums on that comes through you, right? Wow, what a great business, right? And now they're into maids as well. They got monopoly in maids. Is it monopoly? I'm not sure, but they seem to get a lot of monopolies on maids, and therefore maybe and for foreign worker, medical and things like that. So you plug in the insurance component into that. So and I think this morning we were talking about tune insurance with airlines, right? You have a natural captive pool of airline things, and then you plug in the insurance. And then now that Tune has become capital A, Air Asia has become capital A. Maybe when food delivery and this and that, they're trying to build big lifestyle apps. So you plug in the insurance component. So what I'm seeing in this space, particularly in general insurance, those who have distribution advantages will have a natural advantage. And that's why I didn't want to go into it, because I felt that I did not have any distribution advantage, right? I have a media arm, which is BFM, fine, but that's not truly a distribution advantage. No one goes to BFM to do any general insurance, really, right? They go to BFM to listen to good content, right? And there's no content insurance that plugs actually into, Eddy, you're going to say something?
You're absolutely right. I think, you're so spot on, right? I think it's the ecosystem play in the GI side, which is a very, high cost kind of customer acquisition. If you don't have, I think it's going to be hard for GI Insurtech player. You need to have that. That's how you put it. As even Rohit himself put it, right? I've known Rohit for years. You need to have that kind of ecosystem play. Because we realized that in Visha, we realized that much earlier on, which is why we decided to be an insurer ourselves instead of a distribution side. Because distribution side, the max you can get about 10, maximum stretching to 25, but you won't get much, right? The cost of your customer acquisition will eat up the whole thing. So being a digital insurer ourselves, then we have a better chance of surviving, and also need to be very careful on which sector in the GI you go in, right? Car insurance, yes, lucrative, good premium, but high claims, right, guys? If you go into that, you either get yourself burned alive, or you got to be very careful which area you go in, right? In the GI side, and Malik, you're so spot on that part. I totally agree.
So I can see Qasim, for example, right, going, if one of you wanted to go to Qasim and say, Qasim, hey, I can do certain things for you when you do your valuation, this, that, the other. We can insure basically that Qasim car that has been transacted, so that if there's anything wrong with the car, we'll pay the thing, right? So you need to, in a way, bring your proposition to someone like Qasim, or whoever whoever is the guy who is actually really have that distribution advantage, right? And be able to you create an Insurtech product for that company. And I think that is the thing. If you don't have that distribution up, you link someone with who has. So Grab did this with Chubb, but I'm sure Chubb is it might be just a temporary thing until Grab figures out, okay, you know what, we might want to become a digital insurer ourselves because we think this is lucrative, right? That kind of thing. So I can see that you do need distribution advantage in general. So yeah, I think becoming a digital insurer, you still need to distribute, right? So you still need somehow to, even as a digital general insurer, even though I think your margins will be higher, but you still need to partner up with someone who can distribute, right?
Exactly. And even for year one, right? To be safe, because we are not as big as the incumbent, you probably will be doing an 80-20 with your reinsurers. So in actually year one or year two, you don't make much because you want to be on the safe side, because in case if the claims ratio spike, you get yourself into trouble, right? So those are the part you need to be careful. There's a lot of balancing act on that part. It's good to start in that space, but yeah, you need to really have a very strong distribution channel, partner ecosystem to help you push. Otherwise, it's going to be very hard.
All right. Thank you so much, Malik and Eddy. I think we just have a bit of time for one last question. I think this question can be addressed to both Malik and Eddy. So do you see any innovative products that Insurtechs like, either Firelife or Visha would launch that traditional insurance would not?
I would take up the challenge that Malik mentioned about the one, the CPF Life one. If Malik, if we are open to it, I'm happy to collaborate with you.
Fantastic.
I think we can do something, because I think it's time for us to see the crossover between GI and Life, right? It's more focused on the people rather than having this definitive, this is Life, this is GI, right? I think Malik, you're the one who raised it in the roundtable with Benagar, is convergence between composite and all this stuff. I think it's high time for us to reconsider that, coming up with products that is beneficial to the people, right? To more inclusive, I think that's one area we can go in, regardless whether it's live or general.
Yeah. And yeah, so I think on that specific point, Eddie, I mean, annuity products are not that high on the popularity scale in Malaysia, for example, right? Buying a pension, right? It's not that high on the popularity scale because it sounds as if it requires a lot of capital and so on. But I think there are possibilities in that area. There are also other products, I think, to a certain extent, I have to say, I think there are there products which traditional insurance won't? I don't think it's not that they won't. They rather that other people do it first, and then they can come in with it as well. So I think whatever Eddie and I will come up with in terms of when we go to market and so on, what you'll find is that the traditional will always watch. And then if it's traction, then they'll come in, right? Then they'll have the business case to kind of go in and say, hey, this is, so in a sense that we're on the bleeding edge, lah.
Well, the good thing is that we have a first mover advantage, but always remember that we might get ourselves burned. They have all the financial might and capabilities to sustain. We may not have. So our innovative pursuit need to be very, very sharp. And be mindful about getting burned. Because yes, we do have some backing financially from some investors, but you need to be very, very sharp.
All right. Thank you, Malik, and thank you so much, Eddie, as well. I think this brings us to the end of our session today. Thank you so much for taking time off your busy schedules to join us, and thank you to all participants for joining us today. We hope that you have learned from the insights and experiences shared by both Malik and Eddie. So before we end today's session, I would actually like to let everyone know that the applications for cohort 3 of our Fwd Startup Studio are open. So if you know of any startups, anyone with an idea in the fintech, insurtech, takaful tech, or Islamic fintech industries, or even adjacent industries such as health tech and prop tech, do invite them to join our upcoming cohort. I believe our colleague Erin has sent a link in the chat, and also you can scan on this QR code to lead to the application form. Next up, our upcoming event, Launch Your Startup Using Design Thinking, will be happening in 2 weeks' time. In this session, our very own Head of Education Programs, Kavida, will be bringing all of you through a hands-on interactive design thinking process to help you in developing your startup idea through a user-centric approach. So do scan the QR code or click on the link in the chat to sign up for our upcoming design thinking event. And of course, last but not least, I would like to introduce all of you to muruku.com, which is our one-stop platform for any startup-related data, insights, news, and resources in Malaysia. So if any of you are interested in the Malaysian startup ecosystem and would like to learn more about all the latest startups, available grants to apply for, any funding opportunities by VCs, or even startup-related programs in Malaysia, do visit muruku.com to find out more. And that's it for today's session. On behalf of Fwd Startup Studios and Lead Ventures, I want to thank all of you for joining us today, and we hope that you have enjoyed your time here. Do scan on this QR code to fill in a short feedback form to let us know on how we can improve on our future sessions. Thank you, everybody.
Thank you. Cheers.
Bye, guys. Thank you.